That's why you don't go to lower time frame yet, right? You focus on that your higher time frame. Allow chart to get to that your zone on the higher time frame before you go to lower time frame. Now you go to lower time frame, this one will have been giving you bullish structure. You don't mind this one. If you mind it, you're on your own. Now, and so also don't think this way. Don't think because you expect the market to push to this point, you now go and buy now. Like say when it gets to this point, you close your buy. Don't think that way, all right? Make sure you follow to the rules, to the core. Be disciplined. Don't try to find shortcuts thinking you're smart, all right? You cannot outsmart market. I'm telling you this, right? There's nothing I've not done in this market. I'm telling you. Anything you think you want to do, use boats, wherever, you still chop loss.
What time frame do you think is the best time frame to trade on? And what section do you think is the best section to trade on? Drop your answer in the comment section. Now, today's video is basically going to be about time frame and section. Now, I'm going to be explaining to you the best time frame to trade on and as well the best section to trade on. First, let's start with time frame. A time frame is simply a specific period of time that you want to analyze the market. That means a particular period of time that you want to say, I'm going to analyze what's happening in the current market. And now it can be a monthly time frame, it can be a weekly time frame, it can be a daily time frame, it can be an hourly time frame, and it can be a minute time frame. That means time frames can come out in monthly time frame, weekly time frame, daily time frame, hourly time frame, and even minute time frame. Now, every time frame has its purpose. That means there's a specific purpose that you want to use in monthly time frame. There is a specific purpose that you want to use in weekly time frame. There is a specific purpose that you want to use in daily time frame, and likewise the hourly time frame and the minute time frame. So every time frame has its purpose. Now, as a day trader, what you want to focus on or time frame you want to simply use are simply daily time frame, hourly time frame, and minute time frame. That means as a day trader, you don't want to pay attention to this one and this one. You want to simply focus on this one, and as well this one. Now, depending on what you want to do as well too, these daily time frames serve a specific purpose, the hour time frame serve a specific purpose, and a minute time frame serve a specific purpose. I'm going to break that down in this video. First, daily time frame. Now, daily time frame is basically used to understand direction of the market and as well identify key levels in the market. So, what you want to basically use daily time frame for is to 1. Understand direction. 2. Understand key levels. This is what you want to use daily time frame to do as a day trader. You want to understand direction of the market and as well the key levels in the market. Now, when it comes to hourly time frame, what you want to use the hourly time frame is this. Hourly. We'll have the 4 hours time frame and we'll have the 1 hour time frame. So, as a day trader, we want to focus on the 4 hours time frame and as well 1 hour time frame. And what we want to use that for is we want to use the 4 hours time frame to understand market structure from a specific key level from a specific support key level to a specific resistance key level. So you want to understand the market structure between various key levels that you mark out on the daily time frame. Is that clear? Yes. Now, when it comes to the hourly time frame, we want to use the hourly time frame to understand your point of interest. That means the 1 hour time frame is specifically used to understand point of interest or your area of concern. That means area that you want to buy from or area that you want to sell from. Remember, 4 hour time frame is simply for you to understand market structure. 1 hour time frame is simply for you to understand point of interest. Now let's go to the minute time frame. Now, Anything below the 1 hour time frame is referred to as lower time frame or lower time frame. Now, what we want to do on the lower time frame is for entries and confirmation. Now we have the 15 minutes time frame, which serves as a confirmation, and we have the 5 minutes time frame, which serves as an entry. But you can actually enter at any of these time frame here. So what it basically is for you to confirm your stop is ready or not, and as well for you to enter. So this time frame are simply used for confirmation and as well entry. Depending on the kind of data you can simply choose to switch time frames. That means for a scalper is basically going to be using a different time frame from a day trader, and a day trader is going to be using a different time frame from a swing trader. So basically, depending on the kind of trader that you are, you're simply going to be using a different time frame. But what I explained to you right now is what specifically what a day trader is likely going to be using for his analysis and entry. And as I tell you that daily time frame is simply used for your direction, that is overall direction of the market, and as your key levels. Whereas the hour time frame is simply for you to understand market structure and as well point of interest. Now the minute time frame is simply for you to understand confirmation and entry. Let's talk about the section. Now, sections are simply a particular period of time that price is likely going to move. That means the difference between section and time frame is that a time frame is a particular period of time that you want to analyze the market, and section is a particular period of time that price is likely going to move, or a particular currency pair is likely going to move in the forex market. Now, we have 4 different types of sections in the forex market. We have one, the Asian section. We have the London section. And we have the New York. Now, the reason I said we have 4 different types of sections is that inside this Asian section, we have the Tokyo and we have the Sydney. Now, these huge sections are represented in this particular Asian section. So basically, we have 3 major types of sections: the Asian section, London section, and the New York section. Now, what this section does is that it tells you that when it's time for this section, this particular currency pairs are likely going to move very fast, or they're going to move very well. For instance, during the Asian section, we simply want to see that AUD USD, JPY pairs, and NZD pairs are likely going to move very fast. And now, these sections are often open around 7 p.m. to 7 a.m. These are when these particular pairs are likely going to move. That means the AUD pairs, JPY pairs, and the NZD pairs are likely going to move during this Asian section, which is between 7 p.m. to 7 a.m. Nigerian time. Now we have the London section. Now, London section simply opens around 7 a.m. to 4 p.m. And now during this section, the GBP pairs are likely going to be moving very well. That means during this section, we want to see GBP pairs to move. Now, this London section is simply very active in the morning, 7 a.m. to our Nigerian time to 4 p.m. closing time. That means this section actually opens around 7 a.m. and closes 4 p.m. And the pairs are likely going to move this period are simply referred to as GBP pairs. That means any pair that have GBP USD, GBP AUD, GBP CAD, all those pairs are likely going to be moving very fast in the forex markets. Now we have the New York session. The New York session is simply the New York session simply opens around 1 p.m. to around 7 p.m. in the evening. So during this time or during this section, pairs like the USD pairs are likely going to be moving very fast in forex markets. That means there's enough volatility to move the price of USD pairs during this specific time and as well during this specific section. And what this does is that any pair that have USD at the front, USD JPY, USD CAD, USD CHF, they're likely going to move very volatile. They're likely going to be very volatile, or they're likely going to move very fast in the forex market. Now, to summarize all these things, each section will always give birth to London section, and London give birth to the New York section. New York give birth to the Asian, so it's a cycle. This one moves to this one moves to this one, and this one moves back to this one. So it's a cycle. And mind you, some sessions can be open at the same time. For instance, GPS, London session and New York session are overlapping. That means during the hour of 1 p.m. to 4 p.m., these two sessions are overlapping. That means they are open at the same time, which means that every pair that have USD and GBP are likely going to be moving very fast at this time. So section are simply what tells you time that a particular currency pair is likely going to move very fast or is likely going to be very volatile in the forex market. Now, to summarize this, the best time to trade and as a Nigerian is to simply trade the New York session and as well the London session. So this session is the best time for you to trade as a Nigerian, because you cannot be awake at midnight to analyze the chart. The best session for you to trade as a Nigerian is simply for you to trade the London section and the New York section, which are open around 7 a.m. to 7 p.m. So this is the best time for you to trade as a forex trader in Nigeria. Now, if you find this video very helpful and you like this video, I'd like you to drop a comment and tell me that you like this video, and as well, share this video to your friend. I'll see you in my next video. Peace.